and I imagine I've probably got some old stuff on the charts from the past here, although it's not show me anything just now. I wonder if I also have vet calculated by trading views. That got the drawings on it. Yeah, this is where all my drawings were before. So just to quickly check in here with the history. Is that money you owed for pizza? Spacepoint? Probably. No, it's not actually. Just kidding. What we can see here is that there was these. I did this technical analysis in the past, and I obviously got out my old brush, as I so often want to do, and did this scribble, as you see me doing all the time here, with the key area lining up right in there, that 618. Looking over to the right, you can see that that price is 0.009, and indeed if we came back down to touch that over there on the weekly time frame, this is obviously the weekly, and we're trending hard towards the top side, you know, like so far with regards to this weekly. The key areas, I suppose, right now comes in at this other 618 area on the left there at 18 cents, where we've managed to arrive to at the minute. So, you know, this could be a profit taking time for us, and therefore I don't want to see the profits. I don't want to see us dropping back down below this area just here at 0.015 in terms of just our first brief glance look at this thing. But I'm going to jump over to a clean chart here and put the T on the end of this one. And take a fresh look at this for you, because that one's fairly messy in terms of what we've been doing, but we've done what we wanted to see happen so far. So overall, you know, we could say that that's a healthy enough looking chart, having been so much, you know, working within the along the lines of reason, so to speak. So yes, just to reiterate there that everything's nice and clean to see for us. If I draw that in from those highs to those lows, you can see we're right in at the golden pocket. Movements down below the 618 are obviously, you know, speak for themselves negatively, but movements down below that 0.015 areas where we find that 50%, and that would obviously start to be negative for us. But if we came in for a higher low overall in this one, then this price point where we find the 236 would offer up your most sort of delicious looking rebuy opportunity if this were to actually trend towards the top side. However, not managing to take out these previous highs over here doesn't bode very, very well in terms of a trend towards the top side. So how about we remove that instead? Remove that instead, and just assess, you know, how far back down did we come with relation to the movement that we had up the way as well, just to get to where we got to now, to put everything into context for us. So going back over to this, you can see here that the 236. Oh wow! So they were just about to take out the 236. So nice one. This is a key inflection point for us in there at 18 cents. You know, having taken this out at 17.9, so yeah, 18 cents, call it. We're now invalidating this Fibonacci, having done the golden pocket towards the downside. So, you know, so we've done that. We've done the hard work. Now, can we actually go in and do the glorious top area for us? So the next target really does have to remain at looking up towards this top. Now that's on the proviso that you're managing your risk in it around about that 18 cents area, and a quick and easy way, you know, to put that context into people just so they've got an idea of that, if you don't mind trade spotting. Now this isn't financial advice, and this isn't me telling anybody how to trade at all, but it's just kind of to put the things into context. You want to be looking up, if you were looking up towards your previous high, then how could you manage your risk in a healthy enough way? Well, you could maybe make the argument, if you wanted to sort of just briefly, that movements down below 16 or 17 cents essentially. Well, what we're looking at here, 17 cents. Yeah, if you managed your risk at around about 17 cents, you could just take that from where we are now with a risk to reward of 5 to 1 just by the time you come up towards our previous highs, at which point you'd be able to offload a certain amount of your position and ask, are we coming in at this stage with the bearish divergence? Now, we had bearish divergence already here between this high and this high, as you can see here and here, and indeed on the DMI and on the MACD in this zone. So that's, you know, that's happened, and that's led to a 618 Fibonacci retracement. That's good. Now we don't have to immediately trend out of here towards the top side. You know, just overall don't want to see us taking out the area of where that 50% is. And to put that into context for you in terms of just the movements, first off as well, you can see this node on the VPVR from the recent price action in terms of where is obviously a significant area, and popping a Fibonacci around that, you can see that taking out the 50% here is the golden pocket, you know, right where we have this 618. I don't know if you can see that on your screen, so I'll just make it a different color so it's more visible for you. Make it white. So we have the 618 golden pocket lining up perfectly with that 50% area in there. So we don't want to see us going down below that generally, you know, in terms of a close and whatever else. Of course, the main area to be looking to is that 10 cents area. I wonder if that was what you wanted to see. Was it versus USD or was it versus Bitcoin? I wonder. And I wonder if you want any more detail on that. There are a few things, of course, as ever, that I haven't mentioned. Weekly time frame, testing the bullish control zone. Any pullback from this point would merely look like we were being rejected from this on our first pass, as is so often the case. Going down the way towards a 3-day time frame, you can see an example of that right here, having done that already. Now if we do crack on towards the top side, we have already achieved that sort of idea of having been rejected on our first pass with the strength of trend operating towards the top side. You can see that head and shoulders that came in on the RSI very clearly here, while we had an Adam and Eve with a sort of distinct difference top, but of course that being bearishly divergent kind of makes up for the lacks of the double top pattern before we got a measured move coming off of that to bring us down to the 618. Perfect there in terms of regards to how we could be positioned here overall. Good rebuy opportunities if you want to be sort of basing it off of the trend, which remains our friend until we fail to retake out 22 cents towards the top side, or indeed, and then thereafter take out 9.90 or so toward 0.09, whatever that is, 9 cents, 9.9 cents, whatever. Then what you can see here in terms of the 2-day time frame is if we did start to look towards maybe the potential for a pullback is coming in here as we get the bearish divergence. Now, of course, we are above tick the 236, which gives us that ability to go towards the top side, and find the resistance and our support. And then, of course, we would not be looking at divergence here on the RSI, for instance, down below. We don't have enough strength of trend sort of momentum built up with regards to the DMI here to really say that that's on for happening right now, but we can see that we're on the cusp of that, and we could very well easily do what we've seen so often in the past, where you kind of come back into this area and then go up the way here, as you're seeing this kind of overall structure happen, for instance, over here, as you see that happen, that sort of thing happening all over again. For instance, if we find the strength of trend coming in the way, are we seeing that as we continue down the way towards the lower time frames, going down towards the 24-hour time frame? You see, of course, the bearish divergence then giving more credence to the terms of a pullback, while we see the VPVR signaling to us that this is, of course, a key area for support and resistance and liquidity in this zone. It's a liquidity zone here in general, and it's easy to be sort of drawn in with a sort of box that kind of covers that zone area overall. And your downside target to be getting sort of sketchy comes in at 16.5 cents, and your upside target is 19.33333 as well in terms of moving past that zone, and that's very good to see. Going down towards the 4-hour time frame, then at this point you can see we've got this double top. If we do pull back a 50% area that we spoke about earlier on with regards to this here from this point onwards, then what you'd be looking at is the potential for a cup with handle on this one. So you'd have your top here, then of course you're looking for a 50% retrace towards the downside to kind of fit in with the cup with handle point of view. So I'll just draw that out for you in graffiti here. So you'll be looking for that 50% move, and then after that point you're looking to see, can we take out the previous high? So just drawing this in again clearly, then you see that if you go past this area of the 19 cents, then of course you could be looking towards the top side, and the measured move of that thing is essentially along the lines of this here. And if I just shrink this down a bit so you can see, then that puts in a target at 25 cents for you there. So that's a nickel, isn't it, or is that a quarter or whatever? You tell me. But that's what you'd be looking at then thereafter for you. I hope you like that technical analysis there, my friend Trade Spotting. If you do, let me know. I can of course do some more for you if you so desire. Would send out a warning sign, of course, pullbacks from this point here. I've got a high at this point of the sort of the second lip of the cup, and of course then that would then potentially lead to this triangular pattern on the RSI as we would fill out that way, as you can see here. If we had to just mess that up again, if we had this sort of idea on the go, then of course look out for that too with regards to oscillations in around this area and what could be happening. In terms of the volume, we don't have as good a volume profile with regards to cups with handle here in this time frame as you'd really like to see, although there is a degree of correlation with what we're looking at. About on the 1-hour time frame, yeah, that looks a little bit kind of better, although these peaks in here are not so great. But what are you going to do? And also it's whatever, what are you going to do? But that could be what we're looking to. And of course in the immediacy, this is your biggest resistance line up above at at where we're looking. Perfecto says Tradespawn, lovely. Zoner, your message was retracted. What's that all about? What did you say? Cup and handle, man. Cup and handle, man. It's actually, you know, it's called cup with handle in the textbook. So I appreciate that. Most people would call it a cup and handle, wouldn't they? But it's a cup with handle, which is kind of somewhat frustrating if you are someone who likes good English. Cup with handle. You'll see if I just do a search here, it's called the Investopedia says cup and handle, but it was J. William O'Neill who called it cup with handle in the first place. So stock charts have got it right. So J. William O'Neill was the one, but of course I would say cup and handle normally. So there you go. History lesson for all of us. J. William O'Neill was the one that wrote that book. If you're interested in reading that book, by the way, How to Make Money in Stocks is the book, so I'll just search for that and give you that information. It's an interesting book. I've read it myself. The guy himself, J. William O'Neill, William J. O'Neill, whatever, was the type of chap who liked to only go long. If you want to actually buy these sorts of crap things, you'll find not these crap things, these great things. You'll find Amazon links in the description, so I can shill that out to people. Amazon links in the description down below, folky wokies. Whatever. Not links to, you know, just to Amazon. Whatever. Going back to the charts, is there anything anybody else wants me to take a look at, by the way, or are we kind of more or less wrapped up here? It's great to have everybody along for the ride. Oh, I hope I've not messed the browser up too much. I think I'll fix it here in a second. Yeah, it's seen that. Right, cool. Yeah. Cool. Nice one. So, let me see. Have I missed any questions to anybody said? He's not an artist, just a Sparky. That was a good laugh. Nice TA. Thanks so much, Etienne. Cool. Zoner said, thanks. You're welcome, Zoner. Is that money you owed for pizza? Trace on. That's funny. Yes. Haha. If we do take out 22, then it is a cup and handle. Where might the target be in that case? The 1414. Sure, you know, you could look up as high as the 1414. Is, you know, just not as high as. I mean, we can see our target here takes us in a bit higher, by the way. Let me just line this up with the Fibonacci. I'm assuming that you mean between the, you know, the left lip and then the basin, then the 1414. But you could also be looking up as high as that. I would say that if you're looking beyond, you know, 20, to be in all honesty with you, looking past 22.7, so looking past 22.5 is really starting to get quite greedy, where we see the 1618 coming in at. And if I actually just go up towards the weekly time frame and zoom in again so you can see what we're talking about, that this is a significant area. You know, that would be where our previous top was, and if this is all not a cup with handle in terms of this movements down here, just let me hide all this. If this isn't a cup with handle that we're seeing about to happen, then sure, who's to say that we don't actually see the cup with handle come in here and happen in that way, in which case, you know, you've still got ultimately the same target to where we're talking about now, with your 50% movement down the way potential, you know, coming in here at that point in there. But then you're doing it from a far greater distance away, and of course it's a much better trading arena to be in terms of the long-term position working out for us with regards to that one. So I would just caution you in that respect. Okay, so then I would look towards the 1618 because we can see where that would join up in terms of if we were to actually have a proper cup with handle. If you want to be talking about proper cup with handles, then go ahead, read that book. He didn't really look at them on the low term time frames. You know, he'll talk about things like several weeks run into them. So is this a cup with handle? Not really, you know. In terms of like what Bulkowski might be saying about this as well, if you're interested with regards to that. Although again, he wouldn't be looking at this on its low term time frames as all of this. He might be talking about how there's the potential for I was going to say bump and run, but there isn't there. No. You really just look at this currently as being a twin peak pattern. If it breaks down the way and if it breaks up the way, then you're just talking about the horizontal resistance that we have on the chart here. looking back the way, and that liquidity zone that we already covered. That's the key areas for us. Yeah, cool, nice one, Will. Everybody, let me know how you're getting on there in the chat. I'll come back over to the chat box with y'all and see what your chitter chatter is there, and if anybody wants me to take a look at any other coins. As for myself, I'm satisfied that we've done a pretty good look across the markets. Covered in terms of the sort of headline of today's episode, there's a big upward sloping line on all the charts, which we can look to in terms of just saying we don't want to see the prices break that. Of course, there's variations across the different markets. Link, perhaps, could even stay above its, as we see Ethereum and Bitcoin go below theirs. Of course, in terms of broad time frames, we need to bear in mind that we've been in an upward trend for quite a while. This, of course, is just us leaving off the VET one, go back over to Bitcoin here.